What's up, guys?
What's up,
Bernie and
Mike? Part two, same part over here though.
Lifestyle investing,
Fair
where
part
we
one.
invest based off our lifestyle to build a lifestyle.
Get to
Last
that.
one, like Mike was saying, we were talking about IPO, tech
Yes.
investing,
Yeah.
a journey that I'm really passionate about right now
Yeah.
to figure out.
Square versus Twitter.
Square versus Twitter.
Yeah, part two.
Part two. Do you use Twitter?
No. I mean, I can't think of any time in my life where I'm like, I gotta tweet that or what's going on Twitter. That's just not part of my life.
Yeah.
Yeah, I'm old. I'm 35, so Facebook is a huge part of my life.
I don't use Twitter either, man.
Okay, you ever
Yeah.
use Facebook?
I do.
Oh, okay, cool.
Yeah.
Yeah, so that makes me feel like I'm not
Relative
so old.
to 100, you're young.
Yeah, right. That's true.
Yeah.
Yeah.
You're not even a half
Compared
percent
to people who have died of old age, I'm just a
Yeah.
young whippersnapper.
All right, guys. So we talked in the last video about just how risky it is and whatnot. So now I want to talk about some trends I'm looking at.
Okay.
So I was actually polling some of the companies that, and some of these I'm actually prospecting at my work. So it's kind of funny actually.
Oh, that's cool.
That I'm actually trying to sell my software to.
Yeah.
Which hopefully I'm allowed to say on here. But like a few of them, so like this year, Snap, right? Snap, which Snapchat. So they went March 3rd, and their initial public offering was at $27. They're at $14 right now.
And the market in general actually has gone up.
Exactly.
Yeah.
Exactly.
It's reaching highs.
They're reaching
The
record highs.
S&P and the Dow. Yeah.
And these guys cut in half.
Yeah. Well, I think it's part of that on the social media ones, like maybe why Twitter too. I think part of that trend could be the people who use that app all the time think it's way bigger than it actually is.
It's true.
You know, and so some of the people who use that app might be the people who are investing. They're driving that price up because the IPO is that dollar amount, the 27. Is that what it was initially for sale at?
Mm-hmm.
Okay, so it like on the market day one. Here's our price.
Yep.
Okay.
$27.
Yeah,
Yep.
and where do they get those numbers? Where do they pick it? They just
Oh
throw it
man,
out?
yeah. See, and that's another thing that when I was watching a lot of videos, listening to podcasts,
Yeah.
doing some reading, and one thing that I was really understanding is that when a company IPOs, I mean, think about it this way: if you have a startup or a tech company,
Yeah.
right? You know, you've had so much money invested in it. You've had all these VC
Yeah.
companies investing and whatnot.
Right.
So your goal is to get it to a point where it's going to be the highest price, right? Where you can cash out the best. Right, for all the employees that have stock options, you're gonna make a buttload, right?
Because everybody, even coming into the IPO, everybody's already got shares. So like say, you know, this guy has 100 shares, this guy has 100 shares, and then I go, okay, I'm an IPO, 3 million shares at blank per share.
Yeah, exactly.
Okay.
Yeah, exactly.
But yeah, this guy already owns 100, so whatever, you don't know. Okay.
So obviously you want it to be the highest possible
Right,
and bring in
right.
the most amount.
Yeah.
So essentially what I'm trying to get clarified is, like, if you have a company that's going to IPO, you're going to IPO it at the best time. At literally the best time that you
That's
can.
when you're going to release it.
Yeah,
Yeah.
100%.
Yeah.
Right? Because you don't want to do it when you're still growing or...
Oh, I see.
or
when you're fully operational.
Yeah.
You got all the wheels are spinning.
Yeah, all the wheels
Yeah.
are spinning. You got
Right.
all this press. You know,
Yeah.
people on CNBC are saying, "Oh, Snap is going to be crazy. They're going to be great. They're going to
Yeah,
be great."
right.
You know, you got all this momentum. You're going to
Yeah.
go when the momentum is
Because
going
it's
to
the
go.
value. So if you just take however many shares times the stock price, that's your value of your company.
Yeah,
Right? So if it was $1 million or 1 million shares, $10 a share, the company is worth $10 million at that point. So that's, I mean, it was worth 24 times whatever many shares, and now it's worth 14. So the world corrected it, right?
Oh, yeah,
the actual
exactly.
value of it.
Yeah. So like essentially for like Snap, right? So they were doing. They had revenue of $400 million, but their losses were $500 million.
So they're losing money.
Exactly. They're losing $500 million. $500 million a year.
And they're grossing revenue $400 million. So their net loss is $100 million.
No. The net loss was $500 million.
Okay. They were losing more than they were even taking in.
Yeah.
Yeah.
Exactly.
Dude, that's crazy.
I know. So their expenses
Yeah.
would have been $900 million. Almost
Okay.
$1 billion.
Yeah.
Right? If their revenue is
How?
that's what I'm saying.
Yeah, it's probably all the data that they're stored all their stuff in. You know what I
Yeah,
mean? Like
and-
all that cloud space or whatever.
I have no idea. All the
Yeah.
engineers, marketing,
Yeah, yeah.
advertising, all that crap. So it's just
They paid Kanye $100 million to talk about him.
probably, man. So it's just
possible.
yeah. So and like another thing is like when you're a private company, you can kind of report. So if your revenue is under $1 billion, you don't have to report anything.
What do you mean?
So if you're a private company
Yeah.
and you make your revenue is under $1 billion
Gross.
yeah, gross.
Okay.
You don't have to report your earnings or anything.
Meaning you just don't have to tell the press or
Yeah.
anything? Oh,
Yeah.
so but what we're saying really is over $1 billion, you got to tell everybody.
You're supposed to, yeah.
Okay.
But they can still hide some stuff, right? If you're a public
Put it
company,
in a
it's a
separate
law.
company.
Yeah. If you're a public company, you have to.
no
You
matter
have
what.
to. Yeah,
Okay.
because you have
Okay.
investors, you have all
Yeah.
that stuff. And when you're private, you got the VC guys, which you give them reports to. But then us, right? We have no
Right.
idea.
Yeah.
Right? So Snap, they can kind of milk it and say, well, this and that. And the problem is, right?
Well, they could before they go public.
yeah.
Yeah.
They could essentially.
So yeah, before the IPO, nobody knew, and then after the IPO came out,
Exactly.
then they're like, ooh,
Exactly.
but I invested all this money and they're losing.
Exactly.
Yeah,
And so that's another big risk right there where if a company, so one, you got the company they're gonna do their initial public offering at the
Right.
best time for them when they have the
highest
highest
press,
right?
everybody loves it. When are these guys going to release, like with Facebook?
Exactly.
Yeah, right.
Number two, you don't really know their earnings. You don't know the profits.
Right, yeah.
You know, there's gonna be speculations. The CEO,
Yeah.
like I was reading a whole bunch. There's some companies where like the CEO said, "Yeah, we're gonna be profitable this year. We're gonna be profitable."
Right.
But there's no concrete like how much are you making, right? What are your expenses? So
Yeah.
you don't have transparency. So you don't know
Yeah.
really what you're investing in
Yeah.
per se.
Right.
So just with those two right there, I feel like it's a big risk.
Yeah.
It's a huge risk. So a few trends that I'm looking at are and just like a few. So Blue Apron,
What was their IPO?
yeah. So they went from 11 to 5, and they just
Does anybody use that? It sounds like a great idea.
yeah, the food.
Yeah.
Yeah.
I look at the commercials and I'm like, that could work. Yeah, but I just never tried it.
I don't know, man, but yeah. So they've only been for 2 months, so they've cut in half in 2 months. So one company I'm looking at is Roku. So they just said they're going to go public. So I'm curious to see how that's going to go.
Okay.
There's a couple others.
Roku, I don't think has a way to make money.
I don't know,
I mean,
man.
maybe. Oh no, you can buy stuff off there.
Yeah.
But mainly, I use it at home in my bedroom to stream like Netflix and Amazon.
Yeah.
Those aren't things that I pay Roku for. Like Roku, I just paid once $60 at the store and bought it. But I think there must be a way.
There could be some licensing deal that they have.
Oh yeah, if it gets watched through me, then we get this percentage.
Yeah.
Right.
There could be something like that.
Yeah.
I mean, I haven't done enough research,
Okay,
honestly. But the main things that I'm looking at is one, the funding. So I want to know if there's a trend with how much funding they get and if it goes down. Because if you think about it too, if you're an investor, right? So if you got your company, right? I invested $100 million in you, right? So that money's locked. And it's probably been locked for 3, 4, 5 years, right? Because most of that seed money, right? It's going to be a long time. It's not liquid, right? And you don't have the money because you're a startup to really pay me any returns, right?
Right.
So when you do your IPO, right? All these people are putting all this money in, right?
Yeah.
So me as the VC, I'm going to want to now sell my shares, right?
Get some of
And
your
cash
money.
out,
Yeah.
right? Because I haven't got money for 5 years.
Yeah.
So now I'm taking out another 100 mil, maybe even 200 mil,
Yeah.
right?
So that's going to drive the price down.
Yeah, and I'm just one VC. There could be 1, 2, 3, 4, 5. Some of these companies, Blue Energy, $1 billion, Dropbox, $1 billion, Planter Technologies, another $2 billion in funding. Pinterest, they got $1.5 billion
That's
in funding.
prior to IPO.
Exactly. SpaceX, $1.5 billion in funding.
Yeah.
Right? And some of these companies, which is another crazy thing, is like, so SpaceX, they've been around since 2002, and they've never been profitable.
Well, they're like a contest.
Yeah, I think it is a contest.
Right, yeah.
Yeah.
So I don't even know how they would make money.
I got to do more research on that.
Yeah.
Well, they got government contracts, so when they do the rocket ships and stuff like that,
Okay.
you know, they
so
can
they
do
probably
like
have
Boeing or
invoices
whatnot.
that are out there.
Yeah, no,
Right.
they did. 1.5 to 2 billion in revenue this past year.
Nice. Okay.
Yeah. That's what they reported. So,
Yeah.
but since they're not a public company, we don't know for sure. Spotify last year they lost 400 million in losses, and they're looking to go public by the end of 2017.
Good.
So a couple that I'm looking out for. Oh my God, we're already at 10 minutes. Blue Energy, Dropbox, Spotify, Stitch Fix, and MongoDB. MongoDB just filed, and so they might go out within a month.
Okay.
And so the things that I'm looking at is how much funding did they get, right? So
what really means is how many people are going to be taking money out.
Exactly.
Yeah.
What were their revenues, right? To see if there's some correlation with that, and if they're profitable or not. Does that even matter, right? Are some of the companies that are profitable, once they report their actual earnings, and then the public can see, does that go up or down? So those are the three things that I'm really just kind of focused on. And there's been like 20 or so that went public last year. There was more in 14 and then 15. They have a ton. And then this year so far there was 19 so far that went public. Yeah, 19. 15 tech IPOs in 2017 so far. So that's what I got, man.
Nice,
dude. So I'm just pumped for this journey. We're at 11 minutes.
Yeah.
We got to wrap up. That's our take on IPO investing, and I'm super pumped for in a couple weeks to do a little recap.
Yes,
see how things go down.
MongoDB.
Bam.
Yeah.
Lifestyle investing.